If you look in Europe, where they're Bitcoin and Ethereum ETFs, guess what? They're both successful. If you look in Canada, where they're Bitcoin and Ethereum ETFs, guess what? They're both successful. But over the next 6, 12, 18 months, these things are going to be very successful. They're going to push Ethereum's price significantly higher, and they're going to be popular with investors. I feel pretty confident saying that.
Today's show is brought to you by Mezzo, a new home for Bitcoin holders to cultivate Bitcoin and grow wealth together. Use your BTC on Mezzo to unlock real utility and honest yield. Join Bitcoin's first open source economic layer today. Welcome in, everybody, to another show here on Coinage, the only decentralized community-owned Web3 outlet in the game. I'm the host of Coinage, Zach Hougan. Very excited to have back on Coinage with us Matt Hougan, the CIO at Bitwise Asset Management. Matt, there's so much to talk about today, but first, thank you so much for coming back on Coinage.
Thanks for having me. Love this platform and love to be here with you, Zach. It's great.
Yeah, I appreciate you coming back on. And I think, just want to get started with a lot of the excitement and the wait, the anticipation around the ETH ETFs. We're going to get into that in a second in terms of the latest. But want to start with kind of this idea of the Bitcoin ETFs and the fact that we're still seeing inflows, despite the fact that price looks a little shaky in the short term. Why don't we just start with kind of your thoughts on where we're at as a market, as an industry, where we are here today in July?
Yeah, well, I think vis-a-vis the Bitcoin ETFs, I think we're still in inning one. That's the thing that observers who are new to the ETF space, I think, misunderstood as we entered this phase. The reason we're still seeing inflows is most ETF investors still have 0% Bitcoin exposure. And in 3 years, most ETF investors will have 1 to 5% of their portfolio in Bitcoin. And so we're on this sort of tidal wave of inflows that, in my view, has to happen. And so people were worried, if the price goes down, will people be paper hands? Will they sell out of these Bitcoin ETFs? I didn't have any of those concerns at all. We're still so early in this journey. We haven't even unlocked major wealth platforms like Morgan Stanley and Wells Fargo. They can't even buy these ETFs in a meaningful way. I expect the second half of the year to be very strong for inflows. I expect 2025 inflows to exceed 2024 inflows by a significant number. The core message on Bitcoin ETFs is we're still very early. This is going to be multi-years of billions of dollars of flows before we reach some sort of steady state. And that's why we continue to see inflows despite the lack of news catalysts and despite the sort of sideways chopping of price.
Yeah, it has been interesting because I'm not sure how many people really expected that we would see that if price cooled off and if maybe some of the narrative started to turn. And of course, we've got Germany dumping their holdings in the news cycle this time around. But I guess to further the point, are there other things aside from it being still very early on with where we are in the ETFs driving some of this adoption? You mentioned Morgan Stanley. Last night, there was kind of a workaround, it sounds like. Some large banks have secured a green light to kind of work around SOB 121. I know the dramatics of the veto override vote didn't pan out how some people in crypto wanted it to. But even if it is the fact that maybe some large banks can get around what had been seen as an anti-crypto rule at the SEC, what does that maybe do to the game now in terms of adoption, onboarding, the like?
Yeah, money is like water. It finds a way, right? If you build a dam, it finds its way around eventually to where it wants to go. There's a lot of money in crypto custody. The banks want in on that game. They don't want that just flowing to crypto native startups like Coinbase. And investors want it too. The way I would conceptualize that, how that fits into the narrative, is that, Bitcoin crypto is moving from this niche, unusual, largely untrusted, somewhat unknown, mostly retail-owned asset into a truly institutional asset that's part of the mainstream. The approval of Bitcoin ETFs was a big piece of that. Custodians finding a way to operate in this space is a big piece of that. There's some other plumbing that maybe hasn't captured the media attention, but is very true, like major banks becoming APs and market makers in these Bitcoin ETFs. That's behind the scene. The public doesn't interact with that, but it makes these products better and it brings Wall Street further and further into the field. I think it's the same story as the story we heard, I think it was 2 days ago, about Goldman Sachs launching multiple tokenization projects in the coming years. Wall Street has realized crypto is not going away. They're getting to play in this game. They're going to bring their investors to this game. It's a rising tide that lifts all boats. I think it's another piece of good news.
Yeah, the rising tide lifts all boats take is an interesting one to unpack, especially as, again, we await the ETH ETF approvals, because some people might say, oh, you got those coming out, that's going to maybe take away some market share from Bitcoin. I assume you might say not the case at all. When we think about what could happen with inflows in the back half of the year, obviously, I think a lot of people are waiting. I know, you have a front row seat for all of this, as Bitwise also waits here. I know you can't speak to any one application specifically, but what's your take on maybe how much longer we have, how the process has gone thus far? We're going to be chatting with SEC Commissioner Hester Peirce on Coinage next week. Hopefully by then these things are trading. But what's your estimation for where we're at?
Yeah, it's a hurry up and wait scenario. I mean, I do think it's important for the community to remember that 2 months ago, no one thought we were getting spot Ethereum ETFs. Now people are frustrated that we didn't get them last week. We didn't get them this week. It looks like we're moving in the direction of having these sooner rather than later. And actually, from a traditional SEC ETF perspective, this process is moving extremely quickly, right? Lawyers and regulators don't tend to turn things around in a matter of a few weeks or a few days. We're still seeing that on these Ethereum ETFs. So I would feel comfortable with the pace of progress. Of course, we don't know when or if they will launch, but I think we are getting closer and closer to that every day. And I think, to your point, I really don't think these ETFs will cannibalize what we've seen in Bitcoin. And I'll point to a conversation I had with the CEO of an advisory platform that manages over $100 billion of assets. And what he told me was he was uncomfortable letting his advisors who work for them allocate just to Bitcoin because he'd been trained in the world of indexing and diversification. He was really excited for the potential of getting a spot Ethereum ETFs, because then his team could invest in both Bitcoin and Ethereum, have a diversified position in crypto, and he felt much more comfortable about that. So I think this is actually an accelerant even to Bitcoin ETF flows, which I know is counterintuitive. If you think professional investors want to move into this space, and that's a source of major inflows, I think they're going to be happier having two assets than they were having one. So I see it again as additive.
Yeah, let's talk about expectations around those inflows, because I know you've been talking about it lately, as has everybody. Everyone's been trying to figure out where is status quo, where is consensus on what the ETH ETFs might be able to attract when they begin trading. You've got numbers all over the board. You got $5 billion from Fundstrat. Sean Farrell, we had him on the show saying $5 billion is probably likely. Everyone's comparing it to what the Bitcoin ETFs were able to do. I know you've been talking about it. I'm going to try and ask a question that might get something new out of you in terms of what the right number is. But I mean, how should people be expecting these things to go?
Yeah, I would think of it in two phases. So the first phase is straight out of the gate. And the reality is, we don't know what flows will look like in the first days or weeks or even first month of these ETFs. You have to remember that there is the Grayscale Ethereum Trust, ETH, with $10 billion of assets, give or take, some of which is not long-term oriented toward ETH. They were investing in that because it was trading at a discount, and they assumed the discount would go to zero when it converted to an ETF, which it would if these ETFs launch. And there's a risk that that money comes out of the market rapidly. So there's a possibility, I don't think it's a probability, but there's a possibility that within the first days or weeks, we see days of inflows and outflows. That said, if you pan out to 3 months, 6 months, 12 months, 18 months, every piece of data around the world suggests that these are going to gain significant assets. If you look in Europe, where they're Bitcoin and Ethereum ETFs, guess what? They're both successful. If you look in Canada, where they're Bitcoin and Ethereum ETFs, guess what? They're both successful. If you look on Coinbase, where people can buy Bitcoin and Ethereum, guess what? They buy both. Every place that investors have the choice to buy both of these assets, that is what they'll do. I put out a number that said $15 billion of net flows within the first 18 months. And I think that's what we'll see. That's less than we'll see out of Bitcoin ETFs over the first 18 months. But then again, Ethereum is much smaller. So to sum up, the first few weeks or months, don't be surprised if it's confusing, if there are inflows and outflows. But over the next 6, 12, 18 months, these things are going to be very successful. They're going to push Ethereum's price significantly higher, and they're going to be popular with investors. I feel pretty confident saying that.
Yeah, and still, I mean, even that number, even if it's not what Bitcoin ETFs did, it'd still be the second largest ETF launch by far. So it'd still be huge. And I do think, I mean, I guess one of the things everyone can disagree about is kind of the excitement around money coming in. Where I think it was interesting when we chatted with Fundstrat earlier this week, the idea of money coming out, right, in terms of Grayscale's Bitcoin trust, much larger than the Ethereum trust you just mentioned. I mean, is that kind of one of the other pieces that people might be overlooking, is how much money might come out of that trust?
Yeah, I do think there's risk in that. One of the things we're working through as an industry is you have all this locked up crypto, whether it's Grayscale trusts or it's Mt. Gox or it's the German government that's being unlocked and unleashed into the market. That's why I said that over the first few days and weeks, there's some degree of risk. But what we saw in Bitcoin is there were more than enough new investors to swallow all the assets coming out of GBTC and add on top of that. And I think that's what we'll see in ETH. I only use this caution because I don't want people to get, overly excited or overly worried if the first few days post launch, assuming there is a launch, are a little bit funky. That's what you should expect. Keep your eyes on the long term prize. And I think we'll overcome, whatever the outflows out of Grayscale are. And then add significant assets on that.
If there is maybe one point to compare now, just kind of given the overhang and the selling pressures that we're seeing, whether it's Mt. Gox, Germany, U.S. still has a significant chunk of Bitcoin that they hold on to. When you look at ETH, potential overhangs there seem much smaller, just kind of given the way that there's staking involved, and there's also fewer coins held by governments when it comes to ETH. I mean, is there another thing to maybe add to the mix of things that maybe has you bullish on the idea of ETH's ETF pump boost support being higher?
Let's call it ETH finding its natural price level when all investors can access that. I like that sounding better than ETH pump. Yes, right. To sum that up, not only are there not these same sort of liquidity, black holes that may come unstuck, which is a very real effect in Bitcoin and is contributing to the sideways price movement we're seeing this summer. But generally speaking, the supply situation in Ethereum is tighter than it is in Bitcoin in terms of net new issuance, right? ETH issuance depends over what period you look, but is roughly zero once you account for the burn. It's been up a little bit recently. It was strongly negative, net burn before that, but roughly zero. Whereas with Bitcoin, you were dealing with, 2% ish inflation. And so I do think there's a different supply dynamic on ETH. And as you mentioned, you also have all these staked assets and all these assets that are tied up in DeFi protocols. And all of that is not liquid and locked away from the market. So there is a world where the same amount of inflows has an outsized effect on Ethereum's price. I certainly think that's possible just because the supply situation is tighter at this given moment for Ethereum than it is for Bitcoin on a short-term basis. I think that's a real thing to keep in mind.
I was watching you talk about Ethereum on CNBC recently as kind of a picks and shovels play when it comes to tokenization. I do think, I don't know, it's been interesting having covered crypto for a while, even when I was back at CNBC, the idea of all these other major financial institutions now toying with their own blockchains, whether it's JP Morgan or other giants that we've seen, maybe not want to lean into the idea of Ethereum or permissionless blockchains. I'm kind of curious just kind of how much that space has grown, whether it's L2s, whether it's, again, the financial giants building on their own chains, how much maybe some of the demand for block space or the excitement around blockchains has gotten so diluted when you look at the numbers versus maybe just a couple years ago, right? There's so many L2s now. Of course, they're all kind of layering back to Ethereum, but how has maybe your thinking shifted or changed as you see maybe some people saying, look, maybe we don't need ETH?
Yeah, I think that's a good question. So the first thing I would say is I think we've driven a dagger through the heart of this private permission blockchain story. I think the fact that BlackRock launched its tokenized money market fund on Ethereum, obviously in a permissioned sense, but still on a public blockchain, is a signal that that's the direction of travel for Wall Street. And that's become a very successful fund, gathered $500 million of assets. Every other major Wall Street firm is going to look at that and realize that the graveyard of private permission blockchain projects from the last 5 years is massive. And on the other side, Wall Street moving into the public blockchain space and building on that has a very signal success. So I think that's the direction of travel. I'm not much worried about that. I think you do raise an interesting idea of we've seen this sort of fracturing of transaction zone activity on layer twos, on different data aggregation layers. We've seen yeah, ETH becoming less central, but as you mentioned, it all boils back down to ETH in the end. I think what an investor would do if he were or she were thinking about this space, what it tells you to do is that owning ETH is not probably sufficient to really capture the space. You should probably own ETH. You should own Solana. You should own some layer twos. You should own Coinbase because it's tied to the success of Base. You should think about, new chains. You should be looking at Monad. You should be thinking about Mega ETH. You'd want to build a diversified portfolio of all those assets if you were trying to capture the growth of this space. But professional investors probably don't have that luxury. They need an ETF. ETH is what it is. That will give you a beta to this space. If this space is hugely successful, I feel very confident that ETH will be successful as well. That's maybe 100,000-foot level analysis, but I think
Mm-hmm.
for the next few years that will probably be good enough. And then really sophisticated investors can build that basket with these other assets that capture the fullness of the opportunity set.
Yeah, I'm glad you mentioned BlackRock's tokenization efforts as well as Goldman Sachs is off the top, because I do wonder, as we're watching politics and everything in DC kind of play out right now, this regulatory overhang could very much change by the end of the year. And, a lot of people are pointing out that if President Trump does win, in this idea of not having a CBDC wide open for everything when it comes to, the stablecoin issuers, and what that means for on-chain tokenization of money and how this all really does, I think, pour gasoline on an already hot fire. I mean, what are you looking at when it comes to the back half of the year in regards to those tokenization efforts, stable coins, and everything else that we've already seen, really the big money in this space?
Yeah, I think you have to start pricing in the relatively low probability of a massive regulatory reset, which would, as you say, pour gasoline on an already hot fire. I think there is a world of events that transpire that lead us to crypto moving much more into the center of how finance works, and that would be beneficial for tokenization. It would drive stablecoin assets to probably multi trillions of dollars over a few years. That would see investors really put crypto and blockchain in the core of their portfolio along other technology and finance plays. That's probably not the average event that's going to occur over the next 12 months, but it's no longer impossible when you see strong crypto protections in, let's say, the Republican platform, when you see the Fit 21 bill capturing 71 Democratic votes along with 208 Republicans, some bipartisan support. I think there is a non-zero, in fact, relatively large possibility of a pretty fundamental reset on the regulatory state's attitude toward crypto, which would really vault us into the major leagues. So I'm really excited about that. And even if we don't get that, the situation is going to be better than the situation we've faced over the last 3 years, which has been overtly hostile to this industry. Choke point 2.0, making it very difficult to do simple things like banking. That's likely to go away regardless of the election scenario. So we have either a great event or a good event in our future in the next
Mhm.
few months, and that's a pretty positive setup.
Yeah, and even the Biden administration meeting this week with industry leaders, and this idea of even the Democratic Party realizing how off base they might be. It honestly does seem, based on everything that's come out of that meeting, that they were kind of surprised that they were so far off the issue. It is encouraging to see maybe some change happening there too. But you mentioned Solana and this idea of everything changing. I am curious to get your take. We've already seen applications from 21 Shares and Van Eck when it comes to Solana ETF applications. The CBOE coming out and kind of getting behind those. Uh, it's interesting because originally we had Bitcoin ETFs and ETH ETFs approved because of futures trading and the idea of the markets being evolved enough to where the SEC felt comfortable to get those across the finish line. Don't have those for Solana, but I'm curious how you, maybe Bitwise, is looking at that as potentially another frontier to expand into on the Solana front. What says Matt Hougan?
Yeah, look, two things are true. So if you look at ETF history, and of course that's my background, I was the CEO of ETF.com. If you look at ETF history, for every commodity ETF that launched, the SEC has pointed to the existence of regulated futures. That's true for Bitcoin, it's true for gold, it's true for silver, it's true down the line. So this has been the pathway that ETFs have trod to get approval to launch every time. It is simultaneously true that that is not the only pathway that's allowed by current regulation, and also that the interpretation of that regulation could change in a new sort of regulatory environment, which we might enter into later this year. So, I think it's wonderful that those firms, which are great firms, have filed for Solana ETFs. I do think there is a non-zero chance that we see Solana ETFs, within the next year. But it is sort of outside the normal course of business. But again, I go back to this idea that I pointed to earlier. I think the market needs to start thinking about and pricing in the possibility of a fundamental regulatory reset. And in that sort of world, Solana ETFs may become possible. Other crypto asset ETFs may become possible. Basket ETFs may become possible. Again, not the standard approach, but these are excellent firms with very smart people. They're excellent reasons that they're filing for these ETFs, and
Mm-hmm.
I love to see it. And it's certainly a space that we look at and think about a lot.
If you're looking at it and thinking about it a lot, I do wonder if the over/under might be under, I don't know, 2 months that we see Bitwise also join the fray for a Solana ETF.
I can only talk about what's on the public record, of course.
Of course, of course. But I do wonder, anyone can put these out there, right? Anyone can kind of say, look, we want to put an ETF out for whatever it may be. The important thing, I think, as we've seen this year, is investor demand and the idea of people interested in actually getting allocated to these technologies. What have you seen in terms of how you would compare Solana's interest among institutional investors, its name virality, compared to ETH and Bitcoin? Is it really the case that it is up there with those?
Amongst traditional investors, the answer to that is no. It's not. I think the crypto industry has accepted that we now sort of have three titans standing at the top of the industry: Bitcoin, ETH, Solana, with vibrant developer communities, vibrant users, real technology pathways, and I think it's achieved that within crypto. In the traditional world, I don't think that's true. Everyone's heard of Bitcoin. Some people have heard of Ethereum. Very few people have heard of Solana. But when it comes to demand, again, I would point out that I'm not sure that that matters. I know this is really hard for people who live in this 24/7, 365, but most traditional investors for whom crypto will be a 2, 3, 5% of their portfolio just want exposure to crypto. So they want diversified exposure to the space. They don't engage in the tribalism that we see within crypto, where ETH people hate Solana people and Bitcoin and ETH people have very different views. They just think of crypto. They see this industry growing. They want exposure. So for the vast majority of them, they would probably buy all three. They might buy an index fund that blends those three together. And so there would be significant demand. And to be honest, that's right. If you ask me about a space outside of crypto, if you ask me about, I don't know, automobile manufacturers, I don't have a real view between the different automobile manufacturers, but I may want exposure to that industry. That's where most traditional investors are starting from. And remember, these folks control, trillions, tens of trillions, many tens of trillions of dollars. So it may be a naive approach to just buy the field, but I think that will be the default approach for many, and honestly is a pretty solid approach. So there would be demand, I think, if we are able to see multiple crypto ETFs out there.
Yeah, the tribalism is definitely there. If you are in the space, as you said, 24/7, 365, which we are here at Coinage. But I mean, when you back up and look at everything, you said off the jump that we're kind of still in the first early innings of all of this. Let's just focus on maybe, we talk so much about this year, but even beyond it, as you say, who knows what happens in November? We could see an entire reset when it comes to the regulations in this country. But when you do look beyond it, I've seen you throwing some price projections out there in the 250s, when we're thinking about how much this space has already grown, but also what it promises to do in the future. I mean, when you step back and look at everything that's happened in crypto, how are you still kind of wrapping your head around how much farther this industry has to go, how much room there is to run?
Yeah, I'd answer that two ways. And I really think it has a long way to run. The thing I'm most confident about, let's say, Bitcoin's price, is that today's price is wrong, right? Bitcoin is both, too large to not matter, and too small to play its long-term role in the world as a major digital store of value, as a means of apolitical international transactions. If it's going to play that role, this needs to be a 5, 10, $20 trillion asset. And if it's not going to play that role, it needs to be much smaller than it is today and appeal only to a niche community. Every piece of news that I see over the last 3 and 5 years suggests we're moving into this world where Bitcoin and crypto is more in the mainstream than it has been in the past. And if that's true, it's very easy to get to those price targets. It's not a guarantee. Of course, there is risk on the other side. But if it is successful, it needs to be of that scale in order to be successful. The other thing I would add, we're really excited that Bitcoin ETFs have pulled in $15 billion of assets. That's amazing. But this is a $2 trillion space. In most markets, professional institutional investors control well north of 50% of the market. What that tells me is that these investors need to move more than $1 trillion into this market, even at today's prices, just to normalize this with other stocks, bonds, real estate, commodities, every other asset in the world. The $15 billion is great. It's a record, but it's 1 or 2% of what we need to see over the next 3, 5, or 10 years. And that tells me that this space has a lot of room to run. So I feel very confident. We're still early. Investors who are thinking about this space now are still ahead of the majority of investors in the world. And that's just a really exciting place to be.
Yeah, and it's helpful context for, I think, our viewers to kind of wrap their heads around where we're at. I'd be remiss if I didn't mention you're going to be down at the Bitcoin conference in Nashville. I saw you tweeting about that one. Want to preview this panel? I enjoyed the panel preview of saying that the answer is going to be no on this. It's not a passive fad that we're seeing ETF flows. You're going to be out there with James, who's also come on the show recently to kind of share his views. Matt, I always love having you on because we learn so much from you, and Bitwise, obviously one of the leaders in the space when it comes to all this. As I mentioned, we're going to be chatting with SEC Commissioner Hester Peirce next week. I'd be curious, I know you interact with the SEC all the time. I wonder if there's a question that you'd have for her that's kind of burning, or any last thoughts you have, and kind of, sharing any of kind of what's been top of your mind recently, but open floor for you, my friend.
Yeah, she is just such a legend. I think the thing I would want to find from her, if she's in the position of acting commissioner, or if she is in a more central space, what is the regulatory framework that's right for this industry to thrive? She's talked previously about sandboxes, about ways for crypto assets to move from securities to commodities over time. What does the right regulatory stance look like? I think for a long time, people assumed that the status quo was what we're going to have. We're moving into an era where we can sort of expand our minds. She's talked about what this regulatory world for crypto should look like a few years ago. Her views have probably updated. What would be the ideal situation that would allow this space to thrive while still providing investors with protections and disclosures? How do we achieve that? Because that could be a very real conversation in 6 months' time, and it would have real implications for the space. So I would just dig into an update of what her worldview is, of what the ideal situation for this industry is from a regulatory perspective, and it would be fascinating to hear what she thinks.
Yeah, it's pretty wild to see, the SEC dropping so many investigations even today, with a lot of things they had open when it comes to builders, and as you said, putting her safe harbor thoughts around what we've seen play out with Fit 21 and this idea of something converting from a security to a commodity, what that all looks like. These conversations are happening in DC, which just a year ago you would have thought this would have never happened. Matt Hougan, the CIO at Bitwise, appreciate you coming on as always, man. Thank you very much for the time. Got to have you back soon, and we'll keep our eyes on the ETFs when it comes to E. Thanks again.
All right, we'll be working. Thanks for having me.
Yeah, good luck. Appreciate it. That'll do it for Coinage today. Thanks everybody for tuning in. As always, you can check out the biggest headlines around Web3 at coinage.media, enjoying our efforts to grow the community's first community-owned Web3 outlet. For Matt, for myself, for everybody here at Coinage, thanks again for tuning in. We'll see you again soon.